Why does IAS 40 exist? Why do we have a standard on investment property, and how is this different to other assets? The purpose of financial statements is to provide useful information to people who are going to be making economic decisions on the basis of the information that they're looking at. Do I want to invest in this company? Do I want to buy shares in the company? Do I want to sell shares in the company? Do I want to give them a loan? Whatever. When we look at this information, we need to make sure as accountants that we structure the information in such a way that it will be completely useful, that it will represent what's really going on. Part of the elements of the financial statements are our assets, but keep in mind that we have a variation of assets. We have a variety of assets: bank, debtors, any kind of loans that is owed to the company. We have PPE, we have inventory, and now we're adding to that your investment property. And IAS 40 discusses one of these variations, which is your investment property. The reason that investment property differs, or there is a differentiation, is the difference between items being inside the ordinary course of business and items being outside the ordinary course of business. When you deal with property, plant, and equipment, we generally consider that to be inside the ordinary course of business. PPE is assets that the company has that assists them in generating their core revenue. So it was within the main purpose and the main core operations of the entity. Whereas investment property is outside the normal course of business. For example, a company that makes chairs and tables. Any assets that is required as part of that process, be that an administrative building that deals with the organization and the operations, as well as machinery, plant, your land, your property that is surrounding that process and assists and creates the tables and chairs that is sold, all of that is considered inside the ordinary course of business or within the ordinary course of business. If that same company owns a property and they rent that property out to someone else and they earn rental income, that is not within their normal course of business. It is not within their ordinary course of business. So it makes a lot of sense then in your financial statements to split these two up so that the rental income is not confused with the income that is generated by the normal course of business, by the selling or the production and selling of the chairs and tables. So it is this difference, and it is the reason that IAS 40, your investment property, exists.